Right now, the most valuable private companies on Earth are racing to sell you their stock. For decades, these businesses grew in the dark, completely out of reach for ordinary people. But now, those doors are being thrown open. Retail investors see this as the opportunity of a lifetime, a rare chance to own a piece of the technology that will define the next century. In finance, every trade needs a counterparty. To buy stock, someone must sell it. The people selling aren't random. They're the founders and venture capitalists. They've seen the numbers you won't and decided they'd rather have your cash than their own shares. This includes the very people standing at the center of the current AI wave, like Sam Altman and Elon Musk, who are counting on the public to focus on the promise of the technology rather than the timing of the sale. If artificial intelligence is the guaranteed future of the global economy, why are the most informed people in the room so eager to trade their ownership for your cash? Market professionals reveal their true expectations through their actions, regardless of what they say in public. To see where the economy is really going, you have to watch what the people with the most information are doing with their own money. Benjamin Graham, the father of value investing, noted that the intelligent professional sells to the optimist. They cash out when the story is loudest and the line of buyers is out the door, because that is when they can get the highest price for what they are selling. In June of 2007, as the markets were heating up, the founders of Blackstone decided it was time to take their firm public. They walked away with $2.6 billion in cash. Just over a year later, the global financial crisis hit, and Blackstone's stock lost 90% of its value. We saw this same pattern in 1999. Tech companies flooded the market with public listings, right before $5 trillion in value evaporated. Most of those companies never recovered, but the insiders had already cashed out. In 2021, the cycle repeated with the SPAC boom. Insiders raised billions for empty shell companies before the average post-merger value collapsed by over 60%. Well, this is the dine and dash. It is a recurring cycle where insiders sell the top of a boom to retail investors and disappear before the crash hits. Insiders today are reacting to data that retail investors are largely ignoring, the underlying unit economics. This chart shows the projected infrastructure spend. Big tech is on track to spend $725 billion on artificial intelligence this year alone. To understand that scale, if you spent $1 million every single day since the year Jesus was born, through the fall of Rome and the Middle Ages, you still wouldn't have spent what big tech plans to drop on AI in a single year. But look at the return. The entire AI economy generated an estimated $110 billion in revenue over the last 12 months. That is only 15% of what the industry is spending to build it. The integration of this technology into the wider economy is also struggling. Studies of real-world corporate AI rollouts show that 95% of them have produced zero measurable financial return. Insiders are staring into an unfillable financial black hole. The gap between what is being spent and what is being earned is widening, creating an urgent need for them to exit their positions before the market realizes the truth. OpenAI sits at the absolute center of this storm, and its numbers perfectly illustrate the disconnect. This gauge shows OpenAI's valuation relative to its revenue. Their last funding round valued the company at $852 billion, more than 65 times what they actually earn. Their internal projections show a net loss of $38.5 billion by 2025. Between now and 2029, they expect to burn over $100 billion in cash. Buying into these companies at these prices is a bet on blind optimism. It assumes flawless execution in a market that has yet to prove its own financial viability. In the summer of 2007, just months before the financial system began to buckle, the CEO of Citigroup famously admitted that as long as the music is playing, you have to get up and dance. He wasn't expressing confidence. He was acknowledging a giant game of hot potato, where the goal is to pass the risk before the music stops. Today, the potato is AI stock priced for perfection. The insiders are passing it to the most enthusiastic group of buyers they can find, the public stock market. Insiders are rushing to sell because it is the rational way to fund a deeply unprofitable AI arms race. They need deep pockets to stay in the game, and cashing out while the crowd is hungry is the most effective way to secure that capital while offloading the risk. prices have sprinted miles ahead of the fundamentals. While reality eventually catches up, predicting the specific date a bubble pops is impossible. You don't need a magic stopwatch to survive this market. You just need to recognize the informational asymmetry of the room, so you aren't the last one on the dance floor when the music stops.